Hello traders, good morning, good evening, and happy Monday. Happy trading week. How are you guys? How was your weekend? I can see some new guys with us today, so welcome to our family, guys. And this is our Monday weekly trading plan. So by saying that, I mean that on Monday we have the longest sessions normally. Because we are building the whole weekly trading plan for us. And that means we go over this report. This is our trading report, the one that you receive right after the live trading room. And inside this report, please go over this video if this is all new for you. Watch the video how to use this report. In the comment section, you will find all the most important currently webinars. There will be editions, of course. We have one tomorrow, by the way. Now, when you scroll to the down, you have the watch list. Inside the watch list, there are all the instruments telling you what type of cycles, what we are looking to do. And just click on that and you basically receive the trading chart. Okay, so whatever you choose, you click, and this is opening for you the chart. On the top, when you have it right below the comments, you have it separated by the subject, forex, short-term indices, commodities, CFDs, and oh, you can't see the screen. That's not good. That's because I didn't click the view. Oh my god. Sorry for that, guys. Once again, quick. Here, this is the trading report. Inside, this is the video how to use the trading report. In the comments, the most important webinars. You find it right here. There will be more to come. That's the main ones to understand what we are doing. Here you have everything explained, well, more detailed than the watch list, which you will see here. And it's separated by subjects, forex, short-term indices, commodities, CFDs, and cryptos. Investment report, the last one we have, and the watch list. On the watch list, you just click on any of the instruments you would like to see, and you get the idea. Okay, now there's screen, so I hope you saw that. All right, so let's begin. As I said, it's our longest session, so we go one by one, and we start with the euro pairs, okay, and then we continue further. Let me just, yep, okay. So I'll stop, of course. If you have any question, just write it down, and once I'm done, I will reply. So let's begin. The euro dollar, we are bearish according to our long-term plan. We were bearish for a couple of weeks now. The idea was very simple for us. We were in a special cycle. Now, from that moment, we were bullish for 3 weeks, expecting 2 waves correction or a range. We got a range, and once we got the range confirmed, from this area, we basically started to look for sales. Now, our targets are according to the cycle developing. So we have the first cycle, and we're very close to the 61.8, and we have the current cycle, which is the get out of the triangle area, and of course the last leg developing, but this is a shorter cycle. So this is what we have. The first critical zone for fight is right here, around the 114. The next important, and from my point of view, the final area is right here. So I would expect the euro dollar to maintain and remain in a sell pressure. Keep in mind that what very likely will happen, and basically does happen right now, is that so many traders expect the euro dollar to go down that it has to shake it first of all, because the previous week ended extremely bearish, and with the beginning of the week, you know what happens, right? Every trader sees that, says, oh my god, it's crashing, let's sell, right? And that's wrong idea, because you know it was when it's clear trend on Friday, it is most likely designing the coming direction, but not straight away. The straight away normally tends to make some clearances. So the euro is best to do sell rallies. And then, very likely from this area, we're going to switch for buys. Why? Because of these two cycles meeting, right? 1 and 2. That should be it. The divergence should be there. The weekly cycle should be there. And when everyone will start to scream, sell the euro is going to 0.9 or 0.8 or the eurozone is dead, it will be time to buy. What will be the signs for us? We would want to look for the buys. Very simple. False breaks, higher highs. That would be our signs for a buy, or at least when we start to have multiple time frame divergence combinations. So the daily already starts to show the hint. When the 4-hour will start to show its stuff, right? This would be our time to basically look for the turnarounds. Meanwhile, it doesn't happen, so sudden rallies wasn't remains the plan. Next one on the list, euro versus the pound. Now, this pair, as you know, is one of my favorites for the long term. The idea is very simple. We got a triple cycle from the weekly, meaning we expect a corrective cycle. Corrective cycle could be in two variations, two waves, or a range. Now, for a range, we already had one false break. We might get it inside a triangle or anything like that, right? But there is bigger chance, at least as for now, to get something like that. Now it also fits in the monthly view with the monthly divergences, and also on a daily it fits here in triple double. Now what happens on the daily chart is we have the 161.8 level of this cycle almost reached right here. We cleared this area, very beautiful psychological zone of the 090, and we can see here, right, some bank zone. So basically reach there, cycle in two legs. Last leg is a cycle by itself, 1, 2, 3. Simply classical. Time to start looking for the sell. For the most conservative way, since we expect down according to the weekly continuation, for the most conservative way, we would like this trend line to be broken. The last trend line, always the last available trend line, to be broken, right? That's the whole idea. For aggressive, we already are in a good place. We have a false break horizontal right here, followed by the divergence. We have a alternative trend line false break, right? And that's basically the whole idea here of two false breaks, making it good to start looking for sells. So aggressively, we already have the conditions, which means we can start look to sell the rallies. Now, that could try anything it wants here. It can make something like that. It can make something like that right now. And then some bearish hidden divergence, right, for sell. There are many variations how it would go, and we don't really care, because the idea is not how it goes, is once it goes, start looking for the sell. Now, since we expect an ongoing trend, two waves retraced, bearish hidden divergence, or a range are all the corrective ways we accept to look the trade. Okay, so the euro pound, sell the rallies. Once again, guys, if there are any questions, just write down and I will reply as soon as I finish. But please make it according to the pairs I explained. Okay. Now euro yen. On this pair we have no cycles, because that was the last cycle from the weekly, and the target 38.2 of the double cycle reached. meaning game over for this one. Then we had this cycle, double cycle, and the 38.2 of this cycle also reached, right? So that also is basically over. So the whole game here is divergences, which makes it more aggressive. On the daily, on the weekly chart, the last divergence is in play is the bearish hidden. Now we do need to pay attention for this divergence that is developing, because that might be it. In order for the weekly divergence to end, daily has to be a divergence by itself. Daily has a potential of a double bottom with a divergence as well. And in that case, the 4 hour must fit in as well, start to create some kind of false break or reversal signs. Meanwhile, the 4 hour does not have any divergences in play. So very likely that we will start to see here some kind of attempt for sell continuation, and here some slowdown. Okay, so as for now, the euro yen short-term retraces upside are acceptable just to provide most likely sell continuation. The invalidation plan for sells would be if we get false breaks and higher highs, or the alternative triple double. So 3 waves up, 2 waves down, and a breakout. If that happens, boom, game over for the sell plan. Okay, meanwhile, that's not the case. So sell the rallies is still the plan here for the euro yen. Short-term pullbacks are acceptable to the upside because we will want to sell them first of all, right? It's aggressive, of course, and mainly comes from these two cycles, 1 and 2. We don't have divergences in play, we only have a level, and that's why a very short aggressive bounce. That's all. So that's for the euro yen. Costas, for your question, do we need lower lows on the euro pound? Well, that would be the most conservative setup, right? The lower lows after correction gives you the most conservative setup. Since weekly and daily are in agreement, from my point of view, the pair is acceptable to be traded more aggressively. The next pair on the euros is the euro versus the Aussie. Our plan for MD, why did I say to stay away from the euro pairs? Where did I say that? And when did I say that? Never ever say that. Opposite. Trading. Never said stay away from the euro pairs. Never ever. Maybe one specific pair, but never from the euro pairs. From my point of view, we have a classical setups there for trading, and I think healthy market conditions trade. The euro Aussie, according to the weekly cycle, we are in a range after this false break and this false break, right? So our idea is to look for sells. Triple, as long as this invalidation top holds, we are after sells. On the short view, daily must fit in the 4 hour, the weekly direction, sorry. So the last divergence from the daily is bearish. It was bearish hidden. The first move starts and looks okay, which means 4 hour, every rally should be a sell. And the idea here is to get in any corrective cycle. Corrective cycle could be bearish hidden divergence, 2 waves, or a range. Meanwhile, it's building up 2 waves. We do build a bearish hidden divergence. We never ever yet have trendline breaking. So we don't yet have the signs for continuation, right? So the plan is to sell the rallies, yep, but we do want to see the breakout for the continuation, or at least get some kind of false breaks and lower lows, right, to make the continuation. One thing we do need to pay attention to is the possibility that the daily chart, because weekly is bearish, daily could make a corrective cycle by itself, and that could turn to be something like that. Definitely a possible scenario. Plus, look how it is building itself here, right? 1, 2, deeper correction, and 3. And now it's possible triple double, which means if we go above the trend line, that could be for a short term some kind of rallies before the next. It's far away, it's just an option. We don't have that triggered, we don't have any higher highs or trend unbroken, nothing like that, and that's why the plan meanwhile still remains sell the rallies. Okay, so that's basically the whole idea. Next one on the list of the euros is the euro versus the Canadian. We were bearish here for a good while and for a long time now. The whole idea for us derives from here: 1, 2, 3, 1, 2. 2 cycles, 2 different measurements, both have divergences, false breaks, and everything in play. The last situation on the weekly is that we expected, and still in play, bearish correction. Bearish correction could be in 2 waves or a range. The way it looks right now, it is developing the 2 waves. So the idea was to go and look for sells. We got the daily correction 2 waves, broke, and since then, our plan is sell the rallies. Now we do need to slowly start to pay attention for possible slowdown. Why? This is the daily 61.8 and the bearish and the bullish divergence developing. Weekly starts to show a potential divergence by itself. 4 hours starts to show a potential divergence by itself. Now why potential? Because in order for any kind of movement to end, we do need level and divergence combos and basically a turnaround sign. Turnaround signs normally comes after false breaks in healthy market condition, or at least 3 wave push to the upside, 2 waves correction, and breakout. As for now, nothing of that happened. Therefore, the euro CAD is still a sell. Okay, that's the idea. It is still bearish for us, and yes, we can get it all the way down to here. It still has room, and who knows, maybe it's going to start all the way journey to the 100. Why would we limit it if it still doesn't have any reversal signs, right? Why would we intervene? So the pressure was and remains still bearish. Sell the rallies. Euro franc was one of our best setups technically done, and from my point of view is on an amazing place to cash out, or at least partial cash out, and I will explain. What do we have on the euro franc? So first of all, as per cycles, we don't have really anything in play here because of this one candle, right? But it was kind of a news candle. So what we have here is this double cycle. Inside this double cycle, we have kind of a 1, 2, 3 correction. 1, 2, 3. That's where it all comes from. Of course, that's for again more aggressive, because we skip and ignore this one crazy 2015 event when Swiss bank released its floor, its ceiling against the eurozone, the 120 area. We all remember what happened since then. It was costly for many traders. So since this area we got the correction, we returned back to 120, and we have the correction to the downside. According to this situation, ignoring the spike, we are very likely heading towards this zone, right? But in a daily chart, this is what we have right now. So not just we have the 61.8 and some divergence developing against us, we also have the gap from September 2017 cleared, right here. All the stop losses that were placed there for early buyers cleaned, and this is the place where I love to make at least partial cash outs. That's of course my personal view. We do expect pullbacks short term if they come. It doesn't mean I want to trade them, and I'll explain why. But if they come, the plan is still sell, like rejoin the sell or increase the sell. Everyone with personal management. Now, why I would not trade any reversals? Simply because we don't have no false break, no three-wave pushes to the upside and two waves to the downside, not 4 hour, not 1 hour. And that's why from my point of view, and we don't have the conditions for buys. So the rallies, still, the way I see that, is the better plan. And technically, we still have the room to 111 area, and ideally to 109 area. So the Euro franc, why it was one of the most technical pairs? Because it was classical conditions after the rallies, the convergence for the reversal, two waves correction, and the breakout. Since this area, it's all bearish. Now I know many of you entered the previous week and nailed it completely with this breakout. So all I have to say, guys, is well done. That was extremely correct entry. Wasa, I hope I said incorrect. Wasa. The idea here is we can have the corrections. As I said before, I wouldn't trade them because we don't have signs for the reversal. So guessing will be and how deep will that be, that's not my trading style. For me, it's sell the rallies. Well, with a bearish confirmation, of course, bearish hidden two waves corrections, top of the range, all the beautiful patterns, right? According to the rules. As I said, all the webinars for you guys are here. The main part that you should watch is this, all the cycles and this area. Okay, very, very important. All right, next pair on the list from the euros is the last one, is the euro versus the kiwi, the only pair that isn't too clear and could be traded easily in both directions. One, according to the long term, we are in triple cycle, but two false breaks, which means it could be all about range and correction. We still can have two waves, but also could stack in the two in a range. That's for the monthly. The weekly fits in here pretty much perfectly. This was a cycle. Now, kind of possible double top. The divergence is playing here a role, and daily has a divergence range by itself, right? We got a false break on the top, false break on the bottom, and that makes it a range by itself. We're on top of the range, and also divergence comes in play. So the euro kiwi has basically multiple variations here, and that's why from my point of view the euro kiwi is the last attractive pair from all the euros at that time being, and could easily make one more high for another false break, or make this low and then start to sell the rallies. The best way to trade such opportunities is always with the last divergence combos. Weekly bearish, daily bearish 4 hour has nothing bearish at this place. So medium term trading cannot be in play. 4 hour chart is a bullish hidden divergence. 1 hour chart is a bullish double bottom with divergence, right? 15 minutes has nothing in play. Well, as for now. Therefore, again, we also have no short-term combination. So once we can connect 3 different time frames in same direction of the divergences, that's the time, that's the period we can trade: short term, medium term, or long term. For medium and long term, we saw we currently have nothing. Short term, nothing. That's why this pair is basically all doors open. So short term trading is acceptable in both directions once we have the synchronization between the time frames. That's all for the European pairs. Any questions, guys? If there are any questions, please write them. Wonderful. So we are good to continue. No questions there. Let's go to the pound pairs and the pound dollar pair. I've been asked a lot about. So Vlad, are we buying? Are we buying? Are we buying? So let's talk about it. What do we have on the pound dollar? First of all, we are here in a 2-wave cycle with expectations for a correction. Correction could be in 2 waves or a range. Also possibility. If it's 2 waves, that probably will be the low soon, and we are going up. If it's a range, we require more false breaks. That could be also a possibility. That's why the bottom line here, no rushing. The weekly is a kind of a special cycle in play that could be also broken into triple cycle or whatever we want to name it. All the combinations here could be in play. The last divergence from weekly developing is a bullish hidden, right? So in that case, why don't we buy? Because bullish hidden divergence from the weekly must be confirmed with the daily. Daily must be corrective cycle, which means it has to do 2 waves or a range. Only now, when we build it up, we get the level of a possible reversal cycle. Divergence is there in play on the moving averages. Convergence is a fake convergence because it was a regular divergence on the histogram, making now lower lows on the histogram, showing some kind of momentum, bearish momentum. Now, in order to activate that to be a fake convergence, daily must be a divergence by itself with a break of last high. At this stage, nothing of that happened. Therefore, the plan is still sell the rallies. I don't think, at least as for now, that this is acceptable or suitable for long term. I do think that it does look good for the short term. So from my point of view, it's still sell the rallies, but for short term, and I would not be surprised if we start to see here a slowdown and a fight, meaning new lows to be reacted with rallies, new lows to be reacted with rallies until we will get the higher highs. I would not be surprised at all if the pound will do this job exactly. So from my point of view, the best trading at this stage for this pair is basically short term. Still sell the rallies. Okay, and yes, I expect and suspect that this area on the next few weeks to be a fighting zone. It's a great zone, double wave correction from the daily, while the second leg by itself is also a cycle. A magnet area, we called it, right? Few different cycles meeting point. And this last cycle also has its critical level. That's why I expect this to be a fight. Now, how do we sell rallies in that case? Very simple. Since we expect new lows, we need a corrective cycle. Corrective cycle could be bearish hidden divergence, or two waves retrace, or a range. Right? That's the only options we have for valid sell the rallies. Just one tip I want to remind you guys, because I see these mistakes frequently happen, is when you get two waves retrace or a range, or a bearish hidden divergence, and then you confirm this rally on one lower time frame. Don't forget, when you have 1 and 2, each of these legs must be a valid cycle by itself. So when you go lower, make sure that this is a cycle and this is a cycle, and each of them has a divergence, right? So divergence here, divergence here. This way you validate the double wave correction. Don't forget, correction is also a cycle, and if it is a cycle, it's built from two legs. In that case, each of the legs has to be a cycle by itself on the lower time frame. Don't forget these steps, because many times it's like, so can I sell? Can I sell? Can I sell? And the answer is no. Well, you can, but technically it's not correct. Timing is crucial in trading. Don't forget that all the trading always goes with early entries. Those that think that they know better than the early entries. And when they both are cleared, then is the right time. Okay, and that's why I mentioned this one step that traders tend to ignore and forget, just because we all rush in a trade. We all want to be involved, and mainly we're afraid of missing an opportunity. Okay, and my good friend and colleague in this online industry always say, don't cry out trades you will miss. You will have enough time to cry trades you took. Right? It's always, of course, it's a joke, but mainly it's saying, don't rush. Many traders just rush. The fear of missing. So remember, it's not about trading more, it's about trading correct. Why? Because when you trade correct, you increase your chance to make a right decision on the right time. Timing increase your odds to end up profitable, or at least not losing. And in a game of statistics, which all trading is, it's very important to trade where your statistics is not just 50-50, but improve. Very important. Okay, so that's for the pound dollar. The next pound on our list is the pound versus the franc. And wake up, guys, because we are coming very likely to a beautiful zone of possible buys on the next several weeks. Okay, and it might sound like, oh really, why do I have to wait a few weeks? The reason is very simple. This is a weekly cycle, triple, double in play. The last divergence developing is bullish hidden, and that means the daily has to be a corrective cycle. Daily is a cycle that was a special cycle on the first leg, and the second leg is building itself currently. So that was our place on the first time. Then we get a correction, and now we are building very likely this kind of thing before we fly. So on the short term, the pound franc still is bearish, and I say short term because exactly like with the pound dollar and the euro dollar, soon I suspect a fight here. New lows to be reacted with rallies, new lows to be reacted with rallies, until they turn to be false breaks and we get the higher highs. That would be the moment to start switching for the buys. So anything here from 126 area down to 124. And yes, it's a big area, but this is the weekly cycle. This should become a fight area, and new lows should make like immediate fights. Okay. Don't also forget one of the interesting principles is when you get a low and it's false breaking, for example, right? Immediate reaction. The next one would be pretty much the same size reaction. And that's pretty much where you know where to expect a reaction. So short term, pound franc remains in sell rallies. For long term, I think, I might be wrong, of course, but I think that on the next few weeks, it's going to make some amazing opportunity to the buy side. What will happen fundamentally or geopolitically there, I have no clue. You know, I'm not a president of any of the countries. I'm not even a Federal Reserve of the central bank. But technically speaking, the combination is building up, showing that on the coming few weeks, this drop is about to end and reverse. Will that? We have to wait for the signs. Meanwhile, on the short term, our plan remains sell the rallies. Next one on the list is the pound versus the yen, another pair that we don't have any cycles on. The reason is very simple. We got this cycle, which was a double, and it goes and cleared its target. And we had this double, which went up and cleared its target. The target of double cycle is always 38.2 Fibonacci retrace. Both clean the level. So we can't really rely on any cycle here because we don't have any cycle here. So what's the options? Basically, look higher and try to see, do we have anything here? And the answer is again, no. Well, the last divergence is bearish from the monthly. The last divergence from the weekly is well, developing bullish, and the last divergence from the daily is still bearish, hidden, and no signs for the reversals. So yes, this is a potential divergence, but it's not yet reversed. How it's all ending when we start to have false breaks and higher highs, or three-wave pushes to the upside, two waves correction, and breakout. Always the same routine, right? For healthy technical conditions to trade. It's important to remember. Now, we don't have that yet, meaning we can still continue sell rallies, right? 4 hours starts to show divergence, but there are no false breaks, no higher highs. Therefore, we can get a two waves here or a rally for a bearish hidden divergence or any of the highs and basically look for sells. Continuation. The idea of stopping that would be false breaks and higher highs, or 1, 2, 3, 1, 2, breakout. Happened, game over for the sells. As long as it didn't happen, the idea is still sell the rallies. Aggressive because it lacks of cycles. All the trading here is based on divergences. Cycles define the money flow. Divergences define the confirmations for that money flow, or the most given, I would say, sentiment on the trading market. Okay, and that's why without cycles, without a money flow, we basically rely only on the sentiment, and sentiment is something that tends to change much more frequently than the cycle, and it makes it more aggressive. So that's the thing for the pound versus the yen. Now, can we expect short-term retraces here? The answer is yes. We are on the 161.8. Each of the legs of the 4-hour chart is a cycle by itself, so we can still see pushes, little pushes higher, which we will want to go and sell. Okay, so pound yen, acceptable aggressive rallies, which we will want to go and to sell late, right after that. That's for the pound yen. And targets here, well, targets remain open because we don't have cycles. So we don't have a specific target according to MLM flow to go and trade with. So the trading is from the zone we enter until we get the opposite signs against us. That will be the exit place. Okay, that's for the pound yen. The next one is pound versus the Canadian, and the way I see that is also get ready for a reversal. We are dancing around the 100, so on the next several days, weeks, I expect that to make the turnaround and prepare the buys. The best way is to go to the 4-hour chart, get false breaks, which we already start to see the attempts to make it, get higher highs with convergence, which we don't have any, not here, nothing. We also don't have triple push to the upside, double wave correction and breakout, so we're still waiting for it to happen. At the moment we get higher highs after false breaks, we switch to buy the rallies. So if that for example happens, the idea would be two waves and sell, even if that means so two waves and buy, sorry, even if that means one more low. This, if the convergence will happen, a new low would be a fake low. Remember that. And this is where we will want to make our buys. The best days for that, according to our statistics, also coming very interesting. Okay, 16, 17, very, very powerful days for that to happen. And that might be the end of this week. Drops would be good for us, like with the rest of the pound pairs, right? That's for pound CAD. Pound versus the Aussie. Now, this pair we were short, right? The whole idea was for us bearish, bearish, bearish. We wanted to see the triple cycle correction target being cleaned, right? That was our triple cycle. And boom, voila, reached, right? Two waves, false break, divergence. Looks very bullish. But to be able to answer on that, let's take a look what happens on the weekly. According to weekly, this looked like a triple ascending cycle by itself, which means technically we can even see something lower. So here we go with the situation where the cycles from two different time frames give two different variations and not the same. And in that case, the play is always more aggressive and with lower time frame combination. So daily is a game over according to its own cycle. 4-hour is a game over according to this cycle, right? And this divergence here, even though it, let's draw it as it is here. Okay, even though it's pretty hard to see that, that's a bullish divergence here. Also on the last part. So the pound Aussie, which was extremely classical sell for us, basically now became totally acceptable for both directions in play. Now, since we have a bullish divergence after a bearish cycle on a daily chart, 4-hour must be corrective cycle, which means two waves or a range. This is still wave number 1. Now here comes the question. So can we trade this bearish hidden divergence? And my answer here is only for the short term. Why? Because daily is a bullish divergence. We can't trade for a free run bearish hidden divergence on 4-hour when the daily is against. Technically not correct. So what could happen here is 4-hour makes its rally. 1 hour fits in with a divergence and a cycle. So let's say This is our cycle building, right? 61 or closer to 100 could make us some kind of pullback, but that would be short term. From there, very likely we are going for second leg of the 4 hour. 1, 2. And only after that we would be able to see what's to happen for longer run. Meanwhile, since we don't have any agreement between the time frames, that's where both directions are totally acceptable for a play. And I would technically currently prefer the shorter buy drops, for example. But yes, that's tradable also on these drops, but just remember it's for the short term. It's very easy to fall in love in such a situation and say, oh my God, now I'm going to make a lot of money. It's going to crash. I'm going to make thousands of pips. That could happen, but that would not be technically reason. Anything could happen based on luck or some surprises from the fundamentals, right? But we want the technical. Technically, when we have the disagreement between the time frames, it's your time to play smarter. Remember, that's the place where the majority of traders do mistakes. Exactly that place. They ignore the higher time frame signs. They just watch on the 1 hour. Oh, there is divergence. Let's sell it and let's make some 500 pips. Boom. That's where mistakes come in play. Okay? You can't make decision based on one factor ever in life. Not emotion, not logic. You have to combine few factors together and basically aim to make a main timing, the timing to be your main factor. The timing has to be as good as possible when the different facts come to same place. So that's for the pound versus the Aussie, and the pound versus the Kiwi is another pair, like the euro versus the Kiwi, that has nothing clear, and I will explain. For a long term, for me, it's huge buy. So for those who can be in invest trade without paying swaps, this is what I expect to happen. So maybe somewhere close to our pension, we can retire here and say, oh my God, and tell our grandkids how smart we were holding the pound Kiwi, letting it run. But pay attention to the swap. It has to be swap-free opportunity. Otherwise, you will reach the pension without the profits. The swap will eat them all. So that's for the pound Kiwi for the long term. Now, on the short term, we have the opposite situation. We have 1, 2, so we can expect a correction. And the correction could be deeper. So I do want this correction because I want to go and buy it. Now we need to go to the daily chart because weekly is double cycle. Daily is false break. That brings us to a possible range. Now our plan is very simple. Below the middle of the range, we want to go for buys. So for long-term pound Kiwi is buy dips. The short term means we can have the dips. In order to be able to trade them, several time frames have to be in agreement. If it's for short term, it has to be 4 hour, 1 hour with another lower time frame you trade. Okay, very, very important. For long term, it has to be weekly in agreement with the daily, and then the 4 hour has to agree with them both and provide us the buys. Very simple. So pound Kiwi for short term, both directions left. For buys, for long term, we are after buys. New lows or any two waves lows, we are after buys. Any questions about the pounds? Good. So we continue. Two options as always, or it's clear, or I scared you, which normally is somewhere in the middle, right? It looks clear when I explain, but at the same time it looks scary after that, right? That's normally the reality. Just always remember, guys, every single step you do, verify with higher time frames, have no signs against you. That's where your chance become better. Signs against you mainly mean divergences, mainly. Okay? Okay, good. Next one on the list are our dollar pairs, and it's following into the Pacifics. So the dollar yen. Dollar yen, according to the weekly, we have no cycle. That was the first cycle which paid to the correction. Then we had this cycle which now pays to the correction. We have no cycles to trade. If we take a look on the monthly, trying to figure out, okay, so maybe monthly can help us, the answer is no, it can't. So the last divergence in play, basically based on the monthly, is bullish, hidden. Based on weekly, it's bearish, hidden. Boom, a period of disagreements, right? And on daily, it's basically, well, it was a bullish hidden here, but on daily we have a cycle, and that's the double cycle here, which means we expect two waves correction, which currently happen. Now it starts to build some signs for potential divergence. And potential is because it's not triggered yet, so no buys yet. Based on a daily cycle, we should expect 38.2, which almost was reached. That's the area of 110. And possible next area is right here at 109. Why possible area at that place? Because we kind of have a triple cycle here, a special cycle, and we have it also here. So in that place, that could be classical cycle aiming the 50% and the clearance zone around 109 before future decision. So how do we approach that? We were bearish the whole previous week. Our idea was sell the rallies. And now, since we get the sell the rallies, what do? Now we start to have some divergence signs, right? What do we do in that case? So as long as we don't have the turnaround, and that means trendline breakouts or any higher highs, right? The idea for us still remains bearish. We can still get that going lower. We don't have false breaks, we don't have higher highs. Why would that stop, right? If we do have the turnaround here, then we can start looking for some possible buys. Meanwhile, dollar yen remains bearish, possibly aiming towards 109, 109.50, and even more possibly, I would say, future run towards a clearance area of 108. So it's still early to dream about such areas, but technically everything remains in place. So as for now, dollar yen remains bearish as long as we don't have any signs for a reversal. Very simple. Next one on the list, dollar Canadian. Dollar CAD, now this is a mystery. According to the monthly, we had a double cycle, which paid 38.2. Game over. We had two waves down on the weekly, which paid back here, 38.2. Game over. Now look what it's possibly creating here. 1, 2, 3, 1, 2. How does that look? Like a possible continuation all the way up. And that's my personal view here, because if we try to say, okay, so is there any chance for a reversal? we need to see that based on cycles. Based on that, the 100, could that be in play? No. Why not? Because the second leg is longer. But even if yes, the short-term correction should be in play, and it was, but it's stuck inside the last two candles. So no real reasons for sells based on cycles. Daily give us two waves correction, false break, bullish divergence. It looks good, and it's also holding kind of a trend on here. So from my point of view, dollar CAD is buys. Yes, it can still try to make another possible dip. That's a possibility. But I think, at least as for now, that buy dips is a smarter thing. Buy dips means, assuming we are going higher on the weekly cycle, buy dip means two waves retrace, bullish hidden divergence on 4-hour chart, right? This is the daily, so the next one is the 4-hour. Two waves, bullish hidden, or a range. The way I see that, I would be looking for buys, much stronger confidence than looking for sells. And it doesn't mean it cannot make some deeper correction here before the buys. It could. We still have a bigger trend line here. But I think, based on the way the weekly develops, it's much safer now to trade buy retraces, even if that means new low, than deal with sells. That's my personal view. I might be wrong here. So for me, dollar CAD is buy retraces, bullish. Dollar versus the franc is one of these pairs that I have no clue what's going on. Simple. Weekly stuck inside a range. Kind of a top of the range, even, right? Daily is stuck inside a range. No cycles involved. Well, we can say this is a triple, definitely, or special. But from weekly, we don't have any cycles involved. So according to daily, we are for sells. According to higher, we are for buys. So a conflict, right? A contradiction between the time frames. And that's why the long term we have nothing. I would stick only for short term. And currently, both directions are in play. And the only way to find a direction here is to use triple time frames principles. By the way, tomorrow we have a webinar dedicated to all that exactly. All three time frames you choose, and that could be any: daily 4-hour, 1 hour, 4-hour, 1 hour, 15 minutes, or weekly daily 4-hour, which we just saw that has nothing, so only shorter. Three time frames have to be in agreement in the same direction. And even the 4-hour, you can see by yourself where it stays. So trading that, for me, seems like a guess, and I don't love to guess. That's all from dollar pairs. Now the Pacifics, Aussie versus the dollar. So what do we have here? Aussie versus the dollar had a triple cycle from the weekly, now building up a 2 cycle, and starts to develop kind of a possible divergence. Daily must fit in, and daily had for us this cycle, which was a triple by itself, right? 1, 2, 3, and now building up a possibility for the next triple. According to that, we still have the room to go slightly lower, 071, 070 before that, right? We can do different measurements here, but the bottom line, they all will bring us to the same conclusion. That's our best play to look for the buys. So meanwhile, Aussie dollar for the short term is sell the rallies. For the long term, we will be after buys here, and I suspect that will be heavy, hard, fast, and with amazing potential. So from my point of view, Aussie dollar short term is bearish. Long term, we would be looking for these stops and buys. Aussie versus the Kiwi, one of our best payments on the last period. We were after the two waves to be duplicated, 1 2 1 2, and they were right next to 112. So we reached this area of the duplication. It was simply amazing. For the short term, we expect corrections. For the long term, we are still after buys. Why? Because according to the monthly cycle, we are in a special cycle here, which means we are trading inside the range, or the waves rallies. Possibility for new highs are still extremely big. So on the short term, we can trade that as sell the rallies. For the long term, our plan will still remain buys here or here. Back to this area. Okay, so Aussie Kiwi was amazing for us on the last couple of weeks with all the buy plan. Finally paid beautifully. Now it's time to expect the corrections to happen and provide us the next opportunity. Very simple. Aussie versus the franc, finally making the last leg down, and I say finally because we never could create any good divergence yet, and that's why I suspected it will take us into kind of a triple here, which it seems it does. So Aussie franc on the short term looks bearish. For the longer view, we would be after buys. I want to remind you that according to the very long term, we're also into buys here after the triple cycle and the channel, right? Our idea is get the buys. In order to be able to get them, we need two waves on the weekly, which is building up currently right here. Daily fits in, of course, providing us the cycle opportunity. We can build the whole one, which is the weekly, or go with the last one, which is the daily. And here we are, the area of the duplication, or who knows, maybe the next one. So the area of 071 down to 070 is the place where we will start looking for the buys. Meanwhile, Aussie franc short term is a sell, pretty much like the Aussie dollar. Okay, and the last one on the Aussies is the Aussie versus the yen, which was a sell for us due to triple double principle and the range principle, right? We got the breakout, we got the convergence, we got a movement, so we were after sells. Daily starts to show possible divergence developing. That's a weekly, sorry. Daily possibly will create a divergence as well, but MACD still goes down. No slow downs. 4 hour does not have any divergence. Therefore, Aussie yen is still bearish for us. Sell the rallies. It's still the plan. So that's all. That's for the Aussies. Now, quick question, Kostas, Aussie Kiwi, is it good for buy? No, for me it sells now. You mean this bullish hidden divergence probably, right? Well, the answer is very simple, and you know the answer. Bullish hidden divergence must be cleared from the daily obstacles. Daily is bearish divergence, so 4 hour must be corrective cycle before you think about buys, and it's not. As for now, so from my point of view, Aussie Kiwi for the short term is sell rallies. Okay, so that's for the Aussies. The next one on the list is the New Zealandian dollar. Now, according to the weekly cycle, it's out of the range. It was the range target here, and it's out of it. It's still under the triple double pressure, triple double, but double is getting extended. This is the cycle as it's developing. Technically, it has a possibility for a big move towards 0.62 or lower. That's a very possible scenario. Daily, when we start to combine that, well, that was the weekly, right? Now the idea was here for buys as long as this low holds, right? On the last few weeks. Since the last low is broken, game is over. Now, why was that a buy? Because take a look on these two cycles. The development there was monster. That was a cycle, and that was the same cycle. So the plan here was buy for long term, as long as the last low holds. Since the last low does not hold, we currently have nothing in play. We don't have false breaks. We don't have higher highs. We don't have any turnarounds. Therefore, New Zealand dollar is still sell. So bearish. New Zealand and Canadian, another pair that we have been involved with and was amazing for us. We were all the way selling, and it's beautiful, simply beautiful, as per the plan. Now, down to where can we go? It has a room, guys. It's a range here, and the weekly is a triple, the monthly is a triple cycle, which could take it towards 50. It has a room. So Kiwi CAD was and remains sell the rallies. Bearish hidden divergence, two waves retrace are all signs we want to see in order to go for a sell. Could we get short-term rallies? Yes, we could. Thank you, Denise. Have a good day. It was long, huh? It was very long. So could we see here short-term pullbacks? The answer is yes. We are in a very interesting zone for possible pullbacks. We want them to happen. Why? So we can go and continue to sell. If the daily divergence is bullish, 4 hour must be corrective cycle. Corrective cycle could be in two waves or a range. Very simple. Happened, we have a sell. Okay? Meanwhile, new lows could provide short-term buy opportunities. Okay? That's what we want to, that's how we approach that. Sell the rallies with the daily and 4 hour chart, fit in the weekly. Until it will happen, due to the levels, we can deal with new lows and buys. Okay? That's the idea of the short term versus the long term in such situations. New Zealandian franc, another pair that we have been in a sell. That was our breakout and continuation. Coming to a triple cycle here, guys. So again, the level starts to be critical. This is the 161.8, which we will need to pay attention to. Right here. So short term, still sell the rallies, which I believe here would slow down and start to make a movement. Okay, and basically the idea here is pretty much like the New Zealand dollar. Okay, so that's for the Kiwi franc, bearish shorter. That's our plan. The New Zealand yen is all bearish, especially after breaking this low, right? Invalidating the low. the idea is bearish, and they all, like all the rest of the yens, this one as well. We still have this range, so we can see that pushing all the way down. It's also a triple double here. Triple double is a continuing pattern, meaning we are after this cycle 61.8 of all this. So bearish as well, sell the rallies, our plan. And last two, CAD yen and CAD franc. So CAD yen, basically we have it like all the rest of the yens, right, in the triple double breakout, but we do have two false breaks here, and that means we are in a possible range by itself. Well, for us the plan is the same, sell the rallies. Daily fits in as well by the two cycle it created, this and this. False break, divergence, lower lows, sell the rallies. Invalidation for this scenario is here. And the CAD franc, well, this one is a bit of a mystery, and I will explain. According to the long term, we are after heavy buys, right? Triple cycle down, can be better to look for buys. In order to do that, we need the weekly to fit in. Weekly must be a bullish divergence or two waves. As for now, the last divergence from the weekly is bearish hidden, and no two waves correction, and not a range correction. So it could still push lower. Daily, also last divergence is bearish. That's the bottom line. So CAD franc is acceptable for short-term sells, which could provide some kind of two waves here before the rally, or any range pattern, right? It could also make us a triangle finally, right, before the breakout. Short-term for CAD franc are acceptable for sell the rallies. For long-term, we want to see the lows or low of the pattern and go for buys. CAD franc short-term sells, long-term remains bullish for us. That's all from the Forex view. Any questions? I know it's long, guys. Sorry for that. It's Monday. We have to prepare the full trading week. It takes time, and I want to explain all the little nuances so you are prepared. All right, good. So if I scared you enough, no questions, that's good. Then let's continue to commodities, gold, silver, and oil, natural gas. So gold. Now, if you have had a chance to watch the weekly outlook, I was talking about the fact that gold is holding here for a good period of time, meaning it doesn't manage to break these two candles and give any bullish momentum, meaning the bears are still here, just took some breakout, some kind of short break. So what we have here is extended move, the next zone, which is 1180, 1175. Look what happens here. The first leg is a cycle by itself. The correction is double cycle by itself. The next leg is developing as a cycle by itself. We are heading towards this zone, where from very likely we will see a great fight. We have an alternative trend line there. We have full extension there of the big cycle, and we have the short cycle coming to the same place. That becomes a critical area, 1180 and lower. So short-term sells, where from I would expect the stoppage to happen, the weekly to create a divergence or hold it as a low of the range, and provide the turnaround. Gold for the short term is bearish. Longer term would be waiting for the levels, as we discussed, 1180 or lower, for the retraces and buys. So gold short term, sell the rallies. Silver, basically the same idea. It is dancing inside this range. And as for now, no bullish reverses. Daily chart never managed to make any higher highs after a false break, never got a false break, never managed to break the range to the upside. We are going to new low. The new low could take us towards this area. According to the levels, we have here a beautiful zone, and we have here a beautiful zone. So this is where I think silver is heading, right to here, short term. From there, I think the turnaround to come. Natural gas was and remains bullish for us by retraces. Our reason, very simple, triple, and we expect a full turnaround. Now, we can say we had a correction, yes, but the correction was by itself a triple, and that's what makes it to be, from my point of view, extended double. 1, 2. So from my point of view, we are for buys. We have a buy running from 260 for a while now as an invest. So every retraces, valid retraces, is a great opportunity to join the buys. And the oil is short term acceptable for both directions. The current momentum was and remains bullish, and basically the whole idea here is, or we can name it as a special cycle, we can break it as a triple cycle, different variations in play. We had a false break here, we might go all the way to this area and stop. The idea here, we are after short-term corrective cycle. It's 2 waves or range. Currently, possible scenario for both. We have this area 16.5 and 62 and 57. That's our zones to pay attention to. We do not have any divergences activated, false break created, higher highs created. Therefore, the plan is still sell the rallies on the short term. The current momentum is bearish. Indices. German DAX is bearish for us. We are in the weekly head and shoulders play at the end of this special cycle with this bearish convergence. It could also be as a range. So for us, it's sell the rallies. Bottom line. I have nothing deeper to explain because that's basically the whole thing. Daily got us the bearish hidden divergence, and that's the latest pressure. Therefore, sell rallies. Yeah, and the Nasdaq, well, it's fighting around the double top. It could spike and make any another false break here, but the idea here is very simple right now. Weekly under bearish divergence, monthly under bearish divergence, daily under bearish divergence. We need the false breaks, trendline breakouts, and lower lows. We got that, we have sells. So every rally, I expect that to be fake. Something is building up. When, how long will that take? No idea. As for now, we never got a reversal all this rally from the daily. All the reversal signs that were on short term, like the 4-hour chart. That was the last one we were paying attention to. And our plan was triple, double, and breakout. Never happened yet. And therefore, we have no action that we can really take with the Nasdaq yet. So the best one that we have going is the German DAX and the Italy 40. Where is my Italy? Here. which we became bearish in our plan. That was our view. Italy. That was our view. Okay, the break of the triangle, and this is basically what we are following here. So for us, it's of course still bearish. Every rally is a sell opportunity. Well, that's the indices as we have them. Where is that? Stocks. We have the, here we go, the Deutsche Bank, which we are bullish. This is our invalidation, so we are holding it. We had a special cycle here, which is part of the weekly triple cycle down. So for us, it's heavy buys as long as invalidation area holds. And we have another one, which is Teva, which we also are bullish. We cashed out our partial long time ago, around 23, 24. Next target for us, 28, 29. And we are short Facebook, meaning looking to sell the rallies due to the daily false breaks, and we have the convergence. So for us, the sell the rallies is the plan best after two waves or bearish hidden divergence. That would be the best scenario. And cryptos, our last one. On the cryptos, we basically have only two that are relevant at this stage. The first one is the, where is that? The ETP, which is extremely bullish run for us. We maintain the buys. However, we need to start to pay attention here to the slowdown. It would be a good place to cash out. Remember, that was a kind of a triple cycle here, 1, 2, 3, which means we are to 50, and very likely, as for now, game is over. We are currently on 38.2. Final target could be here, 330. So partial cash out definitely smart. And the last one, which starts to be interesting, is the Ethereum versus the Bitcoin, which we were in a bearish view. Let me just find it here. Why it's not here? I removed it. Yeah. So that was our view. It's covered also in the weekly outlook, and this is the place we're coming. I expect that to stop right here. So the surrounding zone of 0.0450 or so. This is also classical clearance area from here with the divergence. Assuming that the divergence will develop, we switch for buys. That's the only two we currently have relevant. The Ethereum itself never managed to hold, so it became bearish. As for now, we have no bullish signs for any of the rest. You know my view on cheap zones. I wouldn't deal with sells, and it's very cheap from my point of view. So I prefer to sit here, wait for the next appearance of a bullish momentum. Basically, the whole momentum to the downside currently happens due to the fact that the ETF delayed. That's all. And the acknowledge of the cryptocurrencies as part of realistic trading postponed. The way I see that, this is a panic sell, mainly private capitals or private investors that simply give up saying, game over. The way I see that, it's coming to levels where it should be an amazing buy opportunity. Waiting for the next signs. Currently, we have none. So that's why we have only two there: Ethereum versus the Bitcoin and the ETP. So that's all, guys. That's the full weekly trading plan. It was long. Thank you very much for surviving, listening to the whole the whole thing. I hope it makes sense for you and it's clear enough for you. Going to work on a report and we'll share it for you later. So I wish you a wonderful trading week. Thank you very much for being here, and I'll see you tomorrow. We don't have a meeting, just a reminder, because we have a webinar. Jordan will be here tomorrow on his webinar, and I'll see you guys on Wednesday and in the Telegram groups later. Thank you very much for now. Have a wonderful day and week.